Hello everyone, Eric here with this week's Stock Market Companion video update. This week we'd like to share with you something that is very important. It's how we time the market. Many people say that you can't time the market. We say you can. And we'd like to show you how we do it. First, let's talk a little bit of what's been happening with the market. Last week Friday the market was stretching up higher and was making new highs after 24 months now of a steady rally. And on Monday, the market pulled back very significantly due to the turbulence in the Arab world. We were ready for that and we were in cash. Why? It's because we time the market, and we'd like to show you how. What we have on the screen is the S&P 500, ranging now from the March 2009 lows all the way up now to the mid-February 2011 highs. And what we see is a tremendous rally that's been incredibly strong, bringing the market up 100% off of the bottom. That's been a very exciting time for us and for our Stock Market Companion subscribers. During this last leg, which has taken the market up roughly 23% with but one pullback, we've been now anticipating a market pullback. A pullback is when the market comes down a bit in value in order to find a base from which to operate again. What we're looking for when the market starts pulling so firmly and consistently higher, we're looking for clues that's going to show us when the market is peaking. Let's show you some. For our clues, we look at market-leading stocks like Apple. Look at the chart here of Apple. Apple last week on Wednesday peaked. That was Wednesday. The market didn't start pulling back until Monday, but Apple already started pulling back, and quite significantly on Friday, giving us an indication that the market may itself be ready for a pullback. That's fine for Apple. It's one stock. What about another? Here we're going to look at Amazon.com. Clearly another excellent company. Here too, Amazon peaked well before the market started to pull back, and had pulled back significantly before the market pullback. How about another one? Here's a chart of Netflix. Netflix also peaking very strongly well before the market pulled back. Here we see finally the broader market, the effects of the broader market pulling back, and the effects now on the individual stock of Netflix. But Netflix was already peeling off of its high several days before the market itself peaked. Those are clues for us to then move to the sidelines. At the Stock Market Companion, moving to the sidelines for us means going 100% to cash. When the market has made such a strong move, when we start seeing signs of leading stocks pulling back strongly from their peaks, we move into cash 100%. Even when we're tracking a stock that we have a lot of interest in, let's give you an example. Here we have Intel Corporation that we like very much for several reasons that we've informed our subscribers about. And we have Intel on last week Thursday moving up, advancing here to a very nice place relative to a recent high, its December high, which was a multi-month high, and now we're coming up to it and ready to punch above it. This looks really good. So on Thursday afternoon, we started an investment in Intel and informed our subscribers about that. But on Thursday night, when we did our analysis of leading stocks, we said to ourselves, you know, this is probably not the best time to be initiating a stock investment. So on Friday morning, even though Intel was pushing higher, we took our money off of the table and we informed our subscribers that we were doing so. That's what we mean by moving to the sidelines. So we're careful as the market starts stretching higher and we start seeing leading stocks pulling back. Even though we've been tracking a stock that we like very much, in this case Intel, and we're looking for a perfect entry, which is coming. We like this entry very much. But we're seeing these leading stocks pull back, so we too, we take our profits quickly. In this case, it was a break-even investment. We moved our cash to the sidelines, and for that weekend, we were completely in cash. And on Monday morning, the trouble in the Arab world, with the markets focused this time on Libya, unfolded, and the market was down 180 points on Monday, and then down further on Tuesday. Also, Intel was down over 4% after we had sold our stock. At the Stock Market Companion, we time the market, and we do so by keeping a close eye on the broader market, the S&P 500, and then the individual markets, the Dow Jones 30 and the NASDAQ, and we keep an eye on market-leading stocks. And when we see a pattern of market-leading stocks peeling back from their highs, we start heading to the sidelines with our cash. That takes us to our tip of the week. Our tip of the week is market pullbacks are a blessing for those who time the market. For us, by taking our cash off of Intel, we were able to avoid a 4% drop in the value of the Intel stock. We are now ready with our cash to engage Intel when the time is right. That concludes our video update for this week. We hope that we've shared with you some things that will be of great benefit for you in your investing years ahead. Check out our website, stockmarketcompanion.com. Try our free trial. See you next time.